Please help me welcome on stage the moderator, Amir Rapaport, founder of Cybertech and co-author of Cybermania, who will introduce his panelists. Welcome, stage is yours.
Thank you, and congratulations for a very, very impressive event. This is the end of the day, still very energetic, and I am biased, but I think we have the best topic. Okay, I'm biased. So we are going to discuss Fintech Security, which is super, super important, FinSec, and we have two really very impressive, knowledgeable, experienced experts on the field of cybersecurity and especially Fintech security. So let's start with introductions. Yes, please go ahead.
Thank you. Thanks, Amir. My name is Jon Hamlet. I'm a seasoned professional in cybersecurity for over 23 years. Lots of experience in data protection, information protection, systems and security architecture across multiple industries, including financial services. I am the Vice President and Chief Revenue Officer for CYBERSOC Africa. We're a Pan-African managed security service provider that also provides financial security, anti-money laundering, and anti-fraud as a service, cyber law enforcement, and typical SOC services. Thank you.
Thank you, John.
My name is Dawid Jacobs. I'm with a company called Authentication Library. We specialize in identity management, from where we take the single existing real-world human being right into the cyber digital twin, with all forensic proof included in that. My background is obviously in forensics. Used to be a crime scene investigator, fingerprint expert, and from there, the passion for identity management grew into where we are now, ensuring that everybody's identity is protected, it belongs to themselves, it's usable, and at all times available.
So we have John, Dawid, John. Pleasure to meet on the stage. We know each other a little bit. Allow me to introduce myself as well. So my name is Amir Rapaport. I'm Israeli, meaning that I'm supposed to live in Israel, but this is a global world, so most of the time I'm not in Israel. But as an Israeli tech expert and writer, I was lucky to establish one of the two largest cyber events in the world called Cybertech in Tel Aviv, every year in the last week of January. Last edition was with 20,000 people. It's super, super hot and important topic, not only for FinTech, for everything. So Cybertech is a big initiative, and based on that success, we got requests from countries to bring Cybertech, the technology, the spirit of innovation, the network. So we have Cybertech in New York, Tokyo, Rome for Europe, and for the first time we are going to have Cybertech in Africa, in Kigali, capital of Rwanda, on June 6th and 7th. Hopefully we will meet then. I would like to share with you in a very few words before we start our discussion about the big challenges of the fintech security. I would like to share with you my vision or my thought about cyber in general. So we used to thinking about cyber as a new era in our history. It's no more the industrial time. We are living in a new era, and cyber is not only cyber security, it's actually a new domain. It's like the earth, like the sky, like everything. It's a new domain that comes with a new economy, but also everything from before has been changed. And in the forefront of the cyber revolution, we have the finance sector for a very clear reason. This is the money. There is the money. So it's very attractive. I used to thinking about it like the pirate times in the 15th century when European people discovered the ocean. They went to the sea with all the treasures and there were other attacks. So you are the big ships and you are attacked all the time. I'm talking, of course, about the financial institutions. So it's a big challenging situation, and you are two really impressive experts with a lot of experience. I would like to start with you, Jon, with an open question, very big question for me. What do you see as the biggest or most important challenge for fintech security?
Thanks, Amir. Firstly, I think we need to differentiate between internal and external threats. Right? Each fintech organization will have their own systems, internal resources, human capital, etc. And that comes with a typical or general, if you like, cybersecurity threats, which include extortionware, ransomware, denial of service type attacks that have a direct impact on the bottom line. But more importantly, from a business perspective, B2B, B2C type engagements, and very, very importantly, connecting into the ecosystem of finance and the digital economy is your external threats, which revolve more around fraud, right? Cyber-enabled fraud, your typical or general fraud, and then which is transactional mainly, and then and I think Dawid will agree with me on this, being able to identify your threat actors. So your threat actors are not only just cyber threat actors, they're also financial threat actors. So people that will go and create, for example, identities in your new platform, and they'll grow those identities over years, staying below the radar. And then when they are primed and ready, and they through your platform have got access to the wider economy, especially switching organizations and payment platforms, whether it's fiat or crypto or combination, they will be able to then launch their attacks and be the most effective. Whether that is, the end goal is terrorist funding, or whether it's money laundering, or if it's various other types of transactional fraud, they will poise themselves and attack when it most benefits them. So those are the two, I would say, main aspects that we need to consider from a cyber threat or security threat perspective. And remember, security is around risk management and risk mitigation. Right, so you cannot just look external, you also need to look internal. And what we're seeing now is the fusion of financial intelligence data and cybersecurity data, both the internal and the external aspects, and then combining that with things like cyber threat intelligence, web and OSINT intelligence in order to mitigate multiple types of threats, including fraud. Thanks.
Thank you, Jon. Same question for you, Dawid.
Yeah, what we found is that the biggest threat, and this is not just for the human, for every institution, is synthetic identities. This is where you basically, an identity is created out of nothing. So you'll have specific crime syndicates that start collecting, or they've already harvested, a huge amount of data through hacking, and they create from there an identity which doesn't breathe, can't eat, and really does not exist. Now, the synthetic identity's core target with the honeypot for the crime syndicates used to be the individual, taking their identity and collecting or stealing their funds. The honeypot is much larger if you're looking into the fintech and the banking space. They can rather deploy 20,000 synthetic identities into a system, and over a 3-year period or so, they get a great credit score and can actually destroy any bank, any institution from there within a week or even a day. So the collective of what they do is They create the identity, they go to a fintech bank or anything, even your normal fiat banks, they open an account, they then apply for a loan. The loan is sent through because of the way that you need to get a loan is you need to have a good credit score. So that's sent through to your credit unions. They then see that this guy hasn't got any type of record or whatever, previous good standing, send it back to the banks. The banks decline the loan. But on the second attempt, the credit unions have already created a profile, and this is where it starts. They breathe the life into this synthetic identity. Now, the synthetic identity can be used to defraud a system, collapse a government, anything. That's the largest threat we have because of the digital age we live in globally. I believe it's synthetic identities.
Yeah, thank you. And John, you mentioned the internal threat, which is very big, but I would like to continue with the challenge of identification, which I think this is, if I refer to what I said in the beginning, this is a new domain, and this domain is based on trust. And cybersecurity should give us the trust that John is John and David is David. And from the bank perspective, you never know who is there with all the protections, and especially now when hackers can easily use artificial intelligence tool. So do you see this challenge of identification as something that the banks are going to win one day, or this is a continuous race?
I think it initially, it really depends on how you onboard your customers and then how you maintain the profiles and your knowledge around them. Understanding that digital identities, or let's call it identities in the digital realm or in the cyber realm, will grow, right? You have a same cradle to the grave type aspect, and being able to understand whether a human is human and whether that human has a true identity in the digital realm is where the difference, that's where the pivot point is going to come around. Once you've got a digital identity that expires with someone that expires in real life, and you can track that person's financial record, financial transactions, etc., and you can validate and trust every single transaction against that one true identity, then you start winning the war. Is it going to be a pivotal point? No, I don't believe so. I think this is something that will continue ad infinitum, and through technologies and processes and multiple levels of validation, we will slowly be able to reduce our risk and increase our ability to validate humans within the digital realm. And this is not just true for fintech, right? This is also going to be true for digital realms like Meta, right? Meta is creating a digital realm. It's an open world realm where you can have interactions. Think of it as SimCity on steroids, and it will be controlled primarily through AI-based rule sets that allow you to do certain things. But having a meta-based economy means that you've got to have some real-world money being injected into that, either through microtransactions or otherwise, and that will become another channel that needs to be monitored, controlled, and for things like money laundering, again, terrorist funding activities, or just for payout schemes, right? So yeah, I think it's something that will grow, and as the environments grow, as the utilization of cloud environments grow, and the mesh between the real world and these digital worlds, and the digital economies that come with them, it's going to become more and more important.
Yeah, and from what I heard about and know about, we tend to think about very sophisticated and advanced permanent attacks, but some of the most efficient frauds are sometimes not so sophisticated, like using digital faked checks. And that takes me to the point, like, if the hackers steal just a few cents from millions of people, or a few dollars, or let's say under a certain amount of money, no alarm in the system. So I've heard about so many cases that sophisticated hackers did very little frauds, or they took very little amounts of money, but in total they took millions and millions. So David, what is supposed to be most in the focus of the banks? The ATP, the APT, the most advanced threats, or just even the very stupid fraud, scams, even ransomware? Where is the weak point of the financial institutions' protection?
I think that at the moment, globally, the problem in the financial solutions starts with you don't know who your customer really is. We've been walking through many of these exhibitors and asking them, how do you do KYC, which is fundamental to whatever you do. So none of them actually has got a KYC in place to say, listen, I know that this guy invested this money and he's got this account and that money is not utilized for illicit transactions. Because if you think about it, you can create 100 different entities, put money in their trade, and then you can actually send that money for terrorism organizations and all that. Human trafficking is a big problem. But if you think about what they're trying to steal is not from that small bidden account. They want to take the money from because if you think about it, if you work 3 years to build up a lot of clients and you can destroy a bank with 100 billion that you take from them, it's possible. So, yeah, I think that with the digital age, we're still not going to solve this if the systems doesn't allow for the surety that that is the rightful person you're working with.
I'd like to just add to that, if you don't mind. Look, all threats have a certain level of risk to these organizations. And you cannot just focus on one aspect, one risk, and think that the 80-20 principle is going to apply. You really need to have systems that can look, at the smaller values, or automated systems that can identify and either enforce a policy to remove that or to reduce it significantly, or to spend the human capital time doing that investigation. I'll give you an example. Callback fraud, right? Someone will buy an online lottery ticket and they'll pay the money, they'll get the token via SMS or otherwise, and immediately within 2 or 3 minutes they log a call on that provider of that service, and that provider is using a bank or a fintech organization to do the back-end transaction, and they have an SLA in place with these guys, right? So if, for example, that token isn't delivered within, let's say, 5 minutes, and that query that has been raised isn't resolved within 24 hours, then the bank will automatically reverse that transaction. So if you've now got 100 people doing exactly the same thing for 10 or 20 hours a day, what you're doing is you're overwhelming the number of tickets that those investigators are actually able to go and resolve, and you're getting that chargeback, reversed. So that's a very low-tech way of committing fraud, which is using interconnected systems and the SLAs in order to effect that. So it's using the strength of the system against itself in order to effect fraud. So as you said, low tech, that's a way to do it. So, if they're making $2 per transaction and they're successful 25% of the time, but each person is doing 1,000 transactions a day, that's a large amount of money. Okay? And they may do this for a week before someone actually catches on and says, hey guys, we've got a massive amount of increased cases and we're not able to resolve all of these, and we need to put a stop to this, or we need to limit the amount of transactions. What that does is it's also negative for the fintechs, because now they're losing the revenue. They've already lost in terms of the fraud, right? And for a smaller organization, that can be extremely damaging. On the back end, and the other side is, if you've got the long-term fraudulent type cabals, these syndicates that are coming in and creating the synthetic identities, they can be taking 10, 20 million dollars in a large transaction. So being able to understand the life cycle of your customers, whether from a B2B or B2C perspective, is as important, if not more important, from a global integration perspective. Because if I launch a service today, and these syndicates are looking for new services, new platforms to seed, and they are seeding for 5 to 10 years' time. Okay? And if they've seeded and they're spending their money and they're circulating their money through all of their various digital avatars or synthetic identities, then they poise themselves for an attack in 5 years' time. That takes a lot of money, it takes a lot of investment, a lot of time to do that, but the payout is much higher. So to answer your question in a simple form, we cannot be focused on a single threat and a single solution. We need to develop systems and processes to reduce that risk overall, and to use technology in order to automate it as much as possible. You can also use service providers like us, for example, to provide an extra layer of monitoring and to reduce the amount of resources that you need, especially human resources that you need internally, and to change that. So you're changing the algorithm on your anti-fraud solution, and looking at your data and making sure that you're identifying these types of longer-term attacks as well as the shorter-term attacks. Whether it's fraud or cyber-enabled fraud, doesn't really make a difference. You must put it in place.
Thank you. We spoke so far about challenges that are quite common between Citibank in New York and a bank here in Joburg. I would like to take the last part of this panel to discuss the uniqueness of the challenges in Africa, which they are quite unique. I would like to start with you, David. What is so different, or what is more challenging in this continent? Please go ahead.
I think Africa has got a huge amount of rural areas, and that is obviously a constraint on communication. A lot of companies utilize the cloud nowadays, but they can't always be at the point where the person needs to become economical viable because of communication and obviously constraint on internet. So that's one of the problems. So there's a lot of companies in Africa that's already started to bring in satellite type of kiosks and all that to assist the people. I think also one of the major constraints, if you look at your KYC, you need a name, you need an address, and you need some type of proof document, like you've had a bank account with it. A lot of people don't have a fixed house. So their abode is not like we have everywhere in the more developed areas. They live in smaller areas that has never been registered. So you've got a lot of people that hasn't become economical viable or inclusive due to those type of constraints. There's a lot of large companies that's trying to do it, especially telcos, to assist with it. And then a major constraint apart from that is that Africa has always had some kind of war, famine, or something like that. So you've got a lot of migration of people voluntary or involuntary. And that's another part of where the identity is a problem, because a lot of people pass away and you haven't got a system that can actually say this person passed away here and he actually comes from this place, or this is who the person is. So apart from just going into the financial sectors, you're sitting with people that will never be known. And I think that is also a very important part of that. You've got to make everybody economically viable and ensure that they do have access to that. And but there's companies that's really working hard on getting that major challenges to ensure everybody becomes a financial, economical person.
Yeah, and I would have to say that we are sitting in Johannesburg, which is a very Western economy. But lastly, we met, John, you and me, in Nairobi, which is less Western. Do you think that they are more exposed to cyber threats in the other regions of Africa, or this is just Africa is Africa?
Look, I think Africa is generally Africa, in my opinion. I agree with Dawid in terms of some of the, let's call it, geographical constraints and socio-economic constraints within Africa. We have a much lower maturity when it comes to our broad economy versus the focused economy within business and trade. What that means for Africa, and I think we're seeing a paradigm shift in the change from hard cash currency based transactions in the majority of African economies to more digital transactions. And as people gain access to cheaper smartphones, fintech enabled applications, banking applications, online banking, M-Pesa, etc., these types of digital channels, they're becoming more and more connected. What is not growing at the same pace as those increase in digital channels and available platforms is the cybersecurity knowledge and the protection mechanisms that go with that, right? One thing I think that is significantly lacking in Africa is the percentage of spend on cybersecurity as a whole, and GRC at the same time, so governance, risk and compliance, not just at a cyber level, but at a business level, right? So the visibility of the business to emerging threats and the realistic, let's call it cyber resilience that they have, is not up to par to the speed that they are going to market with all of these various different revenue channels. So, those are the challenges that I see at a macro level within Africa. What it needs is more investment. It needs more education. We've got exactly the same problem as the Americas and Europe. Just in America, North America at this point in time is over 2 million jobs that do not have people to fill them within cybersecurity. Okay, it's even worse in Europe and it's even worse in Africa. And with the lower salary segments that we have here, we're seeing a massive exodus of really skilled talent in the cybersecurity space migrating to America and Europe and even the Far East, because they're commanding better salaries and a better way of life. And so that brain drain is also artificially reducing the maturity of our organizations and the maturity of our financial industry to combat cybersecurity and fraud at a macro level. So those are the aspects that I see in Africa. Thanks.
I would like to check with the audience before I ask my last question, to check with you guys. Yeah, I see we have a question. Or if it's a remark, please make it very short. Yeah, please. Introduce yourself, please.
Thank you so much. My name is Bongani. Good. Okay. Can you hear me? Can you hear me? Right. Okay. My name is Bongani, and I've got a few technical questions. First of all, we talk about Fintech Security, and I'm just wondering, what's your take with regards when it comes to neobanks we've been talking about raising the KYC model that you're facing a challenge with most of the platforms that are here. I'll give an example. I was doing an experiment with specific banks in Europe to see if I could open a bank account, right? And most of them are neo-banks, and what they need is probably just my email address and probably my South African phone number. So with regards to when we're looking at cybersecurity, what kind of ideas do we have on policy frameworks that governments need to have to protect people from either identity fraud? Because I was thinking about if there's a way to scale the way that I can get inside these banks and be able to create an identity, and with the advance of AI, replicate that process. What are the policy frameworks that you would suggest, or what kind of ideas do you actually have to prevent this kind of a threat that we have existing here? Because Africa is becoming more digitized with a cashless economy, but we don't have those kind of things that protect people from this kind of from these kind of events happening.
Yeah, thank you for the question. Panelists?
Okay, so I was really struggling to hear you. There's a lot of noise in the background. I'm going to try and summarize your question quickly and tell me if I'm correct. So if you're trying to create an identity, a bank account, for example, or a identity-linked bank account in Europe, what would be the policy frameworks or controls that you would recommend that we put in place to stop that? Is that correct summarization? And just if you can speak into the mic.
Okay. I don't know if it's going to be clearer here. All right. So basically what I'm looking at on the South African context, right, is that we don't have these policy frameworks that protect people from actually having to open these kind of things. Like if you have a neobanks, your zero banks, and the KYC model that we're talking about. So I did an experiment with a specific bank. I've forgotten the name of the bank in Europe, where you're able to open your bank account with your email account as well as your phone number, right? And I see that in Africa, we don't have this kind of protections to people that are probably in the rural areas. Everyone else is making a fintech company, right, these days. So what is your take in terms of when you're providing fintech security that could filter down to the consumers so that they don't become either one, victims to these kind of systems, and number two, the fintech companies that are opening to not face the same kind of problem from actors that would pose as people that are opening bank accounts in their hundreds. With the rise of AI and stuff like that, has become even much faster. That's basically as in the...
Yeah, I'll take that one. The biggest problem that we have, I believe, that through our, all the stuff that we've learned in identity management for the last 10 years about, is that you've got a lot of fintech companies, but you also have a lot of identity companies coming up using the selfie against the identity card and using AI to match them and all that. Now, the crime syndicates have already exploited this. All of that, not all of that, but a huge amount of that is already being manipulated to create a synthetic identity and all that. The other part of that is that with the bank accounts, they accept that type of onboarding for the guy or the identity, and then they start doing, you can open your account and all that. That is obviously with the cross-border problem, is that you start getting money laundering, because any person can open up an account like that and they can deposit money in South Africa and you can extract it anywhere in the world. South Africa has been grey listed for a couple of reasons. One of them is money laundering. Simple reason for the money laundering part is in all the bank facilities, fiat or fintech, you always have a structure where the money goes in and it comes out on the other side, but you never know who put it in or who took it out. And that is the biggest problem, is that the identity of those two entities are not available. And now if you're looking at South Africa, we've got Department of Home Affairs. It's a total mess. I mean, like we just had recently the 4 guys that was busy, that was caught and has been extradited to the US. One of the guys had a false identity at Department of Home Affairs with his fingerprints, and he actually managed to have it deleted. So the corruption level in that is at such a high level that 50% of the stuff that they're checking on that against Department of Home Affairs could be fake. So to ensure that that person becomes financially viable, as you suggested, you need to collect that person's core forensic biometrics. Face starts with fingerprints, because only fingerprints and DNA is forensic, has got forensic value. Iris, face, and even more, if you can go to dental records and all that. But when you have that, you've got to be ensure that only that person can trade with his identity. And the thing is that then you immediately stop synthetic identities, fraudulent identities. And the nice thing about doing it on a forensic level is if that person is trying to defraud a system, you can bring him out of that cloak of anonymity that he's trying to work under. I hope that gives you a bit of an answer.
I want to add to that, if you don't mind. There are regulatory frameworks, or regulations, I should say, and policy frameworks in place in order to try and mitigate that. Like, for example, FICA in South Africa, right? In order to go and open up a bank account to continue trading on that, each one of the banks needs to complete and update its KYC, its Know Your Customer data, at least on an annual basis. The problem is that all of the issues that Dawid has just spoken about run rampant in the wild, right? And unless there's a significant investment by these organizations to clean up that identity, it's not going to be resolved anytime soon. Okay. That said, we've got a greater problem in terms of identity fraud, not from synthetic identities, but losing your identity to major hacks. So for example, your credit bureau that was hacked a while back lost, 60 million records. And that information, your identity, your personal data and personal identity is now out there. Your name, your surname, your ID number, your address, all of the things that the banks require and the fintech organizations require in order to validate your identity on a continual basis, this information is there. And you can put additional things in place from a B2B perspective. You can identify if there's 1 or 2 directors that have signing power, or 3 directors that have signing power on an account before you'll engage with them. But if I know that information because I've purchased that information online from an information broker, as part of a threat actor group, well, then it mitigates all of those controls and policy frameworks that you put in place. So ultimately, at the end of the day, you need a global system that is sharing information through trusted, validated identities that is not impacted by corruption and is not controlled by governments. Okay, because as soon as you're controlled by governments and you control, and maybe I'm going to get punished for saying this, but you've got your fiat entities and you've got your crypto and digital currency entities. As soon as that line gets blurred and the regulations do not cross that line, it becomes a breeding ground for money laundering, fraudulent transactions, and more importantly, to answer your question again, utilizing digital identities that are true as tools in order to affect their outcome. So, taking the gogo in the Transkei, and she's 60 years old, 70 years old. She's now gone and created her first time because she wants to send some money to her grandchild, and the grandchild has said, just e-wallet it to me, right? So in order to effect that, she's gone and done this because out of the goodness of her heart and wanting to be in the child space. Having that information and weak password security and things like this impacting on her, that can wipe out not only her financial security, but the next 2 generations behind her if she's the one that's carrying them. So it's an extreme threat that we actually need to combat at maybe at an African Union level or even government level, and make sure that those regulations force the organizations to have true-based identities and to have a much higher level of responsibility and accountability for things like cyber incidents. Because at this point in time, we've got a toothless tiger in the information regulator. There's been many instances of hacks and breaches and identities being distributed, and nothing has happened. And that's a major concern. Thank you.
Thank you both. So as the last discussion of the day, we had the privilege to be much over time. So unless, guys, you have a very important question, do you? So thank you very much for you panelists. Oh yes, we have very important question. Yes, just please introduce yourself and ask your question.
Okay, firstly, before I ask a question, I must just observe the protocol and introduce myself. My name is Thapelo Kuze. I'm the president of the World Lounge South Africa and also the incoming president of the Republic of South Africa after Cyril Ramaphosa, but that is for some other time. And also the head that is going to lead the globalization and the integration of the whole world to become a one tier, but the details will follow. I don't have a question, but I just have an observation that there are many variable constraints that seems to impede the vision. All these challenges that you have raised, they are not challenges. They are being created to kind of like suppress the birth of this revolutionarization to detach it from the government. Do you understand what I'm saying? So now the governments are hindering the progress, right, of creating a harmonizational world that is based on free independent thinking and allow creativity to enhance these technologies to come and play. So I just want to say that you gentlemen are on the right direction in terms of identifying the bottleneck, So soon we will conquer. Thank you.
Thank you.
Thank you so much. I would like to thank also the team of FAMS for great collaboration with Cybertech, Stephanie, Eliza. Congrats for a great event in Africa. And have a very good day. Second day tomorrow. Thank you very much.
Thank you.